Good morning, everyone. How we doing? What's up, guys? '69th members only stream. A stark reminder that I have done this 69 weekends in a row. It's been fun. Here's to another 351 more. Is it Monday yet? It's in fact it's not. Newbie trader, sorry to inform you. Win Revlon $69. That may never happen, actually. Hot Tub streams extra squarty. It is, in fact, Monday in Australia. Congratulations, Matthew Hodge of Canada. Hey, Jen Jen. I would be happy with Rev at 1690. I'd take even less than that. Long time listener, first time watcher. Where do I put my hands? Firmly grasp your shaft and buckle up. It's about to get real exciting in here. Oh, China's fucked. um, so well, the semiconductor side of China. You know, as part of the reshoring that occurs during inflationary periods, you can expect to see a lot more of this kind of stuff into the future. You know, we're gonna try to bring more and more industry back into the U.S., right? And this is just another step in that direction. It's good for the U.S. long term. Short term, not so great. It's been okay. Um, I slept a little bit. I stayed up all night last night reading SEC documentation about ETFs. Is this? It's Chinese semiconductor companies specifically. It could be bullish for US based semiconductors. Although we don't have a lot of manufacturing here. Might be bad news for Taiwan. I mean, the fallout from these like big political moves is always kind of hard to determine. But yeah, it's like U.S. export controls. What's up, Guevara? Oh, looking good, sugar tits. I hope you had a good weekend. It wasn't bad. Bullish for Korea and Japan. Could be, yeah. There's probably another side of it, hampering their ability to create supercomputers, um, damaging their ability to manufacture chips for their military. Way to short them? What is it? Yang? Or yin? Which one's the bear ETF? I think it's Yang. Yeah, Yang. There's probably like Chinese semiconductors. Yeah, Soxel. Well, that's semiconductor. Full success. I don't know if there's an ETF that specifically targets the Chinese semiconductor market, but Yang might be sufficient. I mean, you're playing the news though. You're kind of late to the party. Clean out the card. Was wondering if you had a comment on the Swiss National Bank swaps this week. Well, they're gonna bail out Swiss, right? We talked about this when people were first talking about Swiss being over risked. I'm not gonna let Credit Suisse fail. Banks don't fail anymore. It's like protecting them is built in now. Morning, Sisyphus. How you doing, man? Thanks, Lawrence of Arabia. Thanks again for your stream. This will be the last time I use PayPal because I heard they're doing some shady stuff. I'm gonna do Dillionaire. Thank you so much, Dan. I appreciate it. What's PayPal doing? I thought they pulled that back. I appreciate it, man. How does Costco not appear to be a giant Head and Shoulders? It does. Costco does not look super good, technically. Although the pullback may already be complete. You know, it had a similar pattern like leading into like March of 21 back here, on a smaller scale, obviously, but you know the pullback basically just right to the that initial level, right? Uh, So Costco's pullback may be mostly done. I'm sure it'll experience some more turmoil throughout the next year. I actually have buy orders set for Costco at like 450, 440, 387, and 350. Bipolar Pickle, welcome to Dillionaire. Thank you so much, man. I appreciate it. Hit me up on the Discord. I'll get you added to the country club, man. Any news on Revlon? No, nothing. Not as far as I can tell. You know, they'll file a form with the SEC if they're approved for continued listing. So that's probably the soonest we'll get news. Any credence to doubling the time frame for each GME run from recent Reddit posts? I mean, all the runs on GME have still been within like the defined parameters of the OPEC cycle. No. I really didn't see the post, so I can't say what they're speculating on, but yes and no. I mean, in Feb, we know they had probably deferrals and they simply walked away from shorting through a large chunk of this period. So it's really possible that we're seeing that effect, but correlation isn't causation, right? And the reason we're seeing that effect seems more important to me. Pulling it back or not, it's a wildly concerning statement. What? Wait, now I'm lost on what you're talking about. Oh, the PayPal thing? Um, Possibly, yeah. They'll get bought out. Their payment services system will get bought out. So I'm not really concerned about like the future of PayPal. Um, I think they're just kind of scrambling for a way to continue to compete. And there's so many more payment service providers that they're running out of rope with which to hang themselves. Calls on $2 hot dogs. I mean, I'll buy Costco. If Costco hits 350, I'll buy a shitload of it. Like I'll put some serious money into it. I'm just saying, someone in my family was shopping for towels this week and bought at BBBY over Costco. Punt. Is it because they didn't have a Costco membership? I just want to say thanks for being the coolest pickle out there. Always the highlight of my weekend. Kick it in the hot tub. Thanks, Dominic. Does KO have an association with Jimmy? Could it be one of the swaps? That's possible. I I mean it's in XRT, I think. So there's something to that. It's had some similar. It's a big retailer. Well, this wing of it is, right? The distribution. I guess big wholesaler. I think it had a big run in January also, but I don't know, everything kind of did. It ran up in early Jan. Interesting. There may be some correlation there. I don't know. KO's not super liquid though. So you'd assume that. Sorry, and initially I thought you meant Kroger. KO's not super liquid, so it doesn't make sense for them to use it for swaps for GME. If they're trying to get liquidity through swapping, KO doesn't make a lot of sense. Daniel Hunger, welcome to Dillionaire, man. Thank you so much. I appreciate it, dude. Hit me up on the Discord. I'll get you added after the stream, man. Red had a decent after hours. Yeah, I saw that. I wonder what in the world would have caused something like that to happen again. Count thoughts, more ups likely through October 21st. Possible, yeah. I mean, it's peaking right now. Dow's pulled back a little bit into the end of the week. Remember that Caterpillar is extremely index exposed. So, even if people are bullish on the underlying, if the indices are dropping hard enough, it's going to see some pullback. Now, it didn't see nearly as much as the major indices did because people are still buying a lot of Caterpillar right now. But we did see some. Uh, Friday opened up some decent opportunities to get in right at the like 177 resistance. Obviously, below it is ideal. Um, but yeah, I could see Caterpillar moving up. Um, this could chop a little longer, which is annoying, right? Especially if you're targeting that higher range up around like 185 and above. The stagnation in Caterpillar is the reason Theta's so worthwhile on it. Because this isn't the first time Caterpillar's done this. It did it back here in August for quite a long period of time, just stayed at the same resistance for what seemed like forever. I remember back here it did it. This is the first time I got burned not buying enough Theta on Caterpillar because I ended up having to close like right in here um because I was just running out of time. So it's happened. It happened here for several weeks. You want to be prepared for that on it. Especially when it's in like one of these like kind of revaluation cycles. Good morning, Grandpa Girk. Thoughts on SPY movement this week after the kangaroo roller coaster from last week? Yeah, right. Two like 500 BPS upside moves and three 200 and what 30 BPS down, 250 BPS downside moves. Um, Definitely a crazy week on SPY last week. I'm still straddled into Monday, but I do think there was some of the puts shedding and more bullish interest moving into like the November 4th expiration. Very interestingly, that we're moving closer to a potential for like a rally. Um, but we still have another week, right? We still have another week with a lot of those in the money puts not budging. And unless some pressure is put on them, I think we're going to continue to see like really volatile upsides and really volatile downside. Recently, you said something about the housing market bottoming. What was your view there, and when do you think it will happen? Um, I'm targeting like mid 2023 for the bottom of it. I think when it'll either be mid 2023 or right into Q3, beginning of Q3 2023. Um, the interest rates are obviously already drying up demand. And with pricing significantly faster than price realization significantly faster than it's ever been in the past. We're already rapidly accelerating to a bottom in a lot of regions, right? And part of that digital pricing of homes that we're seeing now is that you know you're really starting to develop like a real-time market for housing almost. And it's becoming less regionalized. And so, the pricing of houses in less desirable areas has benefited greatly. And the pricing of houses in more desirable regions has dropped. And they're kind of finding an average level across the US, except for extremely high priced outliers like New York City, San Francisco, Southern California, coastal Florida. But we're seeing much faster price realization. So, back in 2008, we didn't have that. And it took, quite a lot of surrender from sellers to, see the market decline. And we didn't really see a bottom till about 2012. I think this time it's going to be a lot more rapid. It already is a lot more rapid, I should say. The data supports a much more rapid decline in home pricing just over the last 6 months, and that's going to continue for at least 6 more. So hopefully, sometime around the period where the Fed wants to start pulling back to the target rate, um, then we'll start to see, you know, favorable loan conditions alongside lower priced homes. Did you sell any Upstart on the run this week? No. I rolled some stuff. I think I rolled some nearer dated calls I had for October, but that was it. Is it too late to open up an Upstart position? What's the recommendation for entry? Currently the like the closing price Friday I think was in a good range. Below 24 is pretty nice. I don't know how much longer we'll stay here. There does also appear to be a bit of accumulation down at the $20 range. This was a super solid floor all throughout, you know, the last couple weeks. But yeah, 22 is not terrible. I mean, you want to make sure that you get a decent amount of theta. It's been on Reg Show a while now, but it can be on a Reg Show a while longer, right? And really what we want to see is more periods of high pressure while on Reg Show, right? Because the only way to get liquidity for this without jumping the borrower rate to an obscene number is to use synthetic liquidity. And synthetic liquidity comes with obligations. And, you know, from GME, we know what that means. With the drop back down to below 360 on the SPY, do you still think put side is exhausted and the SPY melt up? I don't know about melt up. Melt up's a strong word. I think we can bounce with SLD. Hold on, there's more to this. Second, I gotta open it up so I can read the rest. With SLD Q3 earnings bad, rate hike November 1st. I'm trying to be bullish on SPY short term, but I'm having a hard time seeing it. I agree. I think a lot of earnings are still going to be okay. Remember, demand is still very high, right? Like that's part of the Fed's problem is that demand really hasn't dropped off. But by November 4th, you know, I think like 80% of the S&P will have reported. Um, you know, the Fed's not really changing their forecast, but they do think that their rate increases are having an effect on inflation. So that's good. But yeah, I agree. It's difficult to be bullish on it, and overall, I'm very bearish. I just think that the seller exhaustion is kind of peaked, and we've stabilized for far too long in the range we're in. So you know, every day the short position is weakening a little more, right? Um, and the longer that drags on, the more it's going to weaken. And we do have SLD next week, but you know, we could rally into SLD, then pull back for roughly the same amount, right? If we have 225 basis point moves up over like Monday and Tuesday, and then Wednesday we drop 250, you know, we're still gonna just be in the same range, right? But you know, once they re-leverage their margin, you know, we may see them start to pump more money into the long side than they have been. So like new short positions aren't really opening up that are very strong. But new call positions aren't opening up that are very strong either. And so we need a determination there. Otherwise, yeah, we're just gonna keep volatilely bouncing between like 3,700 and the high like 3,500 range. Which is very profitable, you know, if you play it properly. I can say I have never in my life had multiple overnight SPX straddles print 500% in both directions. What do you expect to buy long-term puts or puts to capture the next leg down below a 30, 50, or a crash? Do you have a price point you're looking at to enter a position? Thoughts on strikes, amount for theta, buying puts below 365 feels gross right now. Yeah, see, and you're facing the same issue that a lot of short sellers are facing, right? Puts are overpriced, VIX has remained elevated, which makes it really, really unattractive to leverage the downside on SPX. I'm targeting the 3,800 range initially to begin DCAing into a short position. Probably targeting March of next year, maybe June, for far out of the money, like a large, far out of the money put position. And I'm going to continue to DCA into that. I don't think we'll cross 4,000, but if we do, I'll keep DCAing for that. But giving myself just plenty of time, right? I think once we start to see really downwardly revised Q3 and Q4 earnings, that is going to be probably the most most reliable spark to set off all the current problems with the economy. And actually see those equity sell-offs that we've been waiting on. Cat thoughts. Okay. Good morning, Grandpa Girk. Thoughts on the SPY? Covered that. Recently you said something about the housing market bottoming. All right. Where am I like lost in the questions here? What are your thoughts on oil, natural gas reserves down, winter coming, and Biden threatening OPEC? I'm already in Oxy. I'm pretty exposed there to oil prices. I would like more natural gas exposure. I'm just not sure where I want to get it from. I'm still researching it. A lot of the plays have issues, like big glaring issues. Europe's definitely gonna have a problem. Thanks for the perspective. Hearing you wait for 3,800 sounds insane to me right now with all the bear noise I keep hearing. And maybe that's the point. You don't seem to be fearful of missing the crash. I mean, I'm not, right? Because I'm cash. So so if I miss the crash, and I can always buy puts into a crash. They're expensive, but they'll still print really hard. Um, you don't seem to be fearful of missing crash and dropping below 350 this year, despite everything. I'm not saying that we can't. I could see easily hitting like 3,400 before the end of this year. But I also think that we'll go much lower than that. Um, my target to the downside is probably about 290. Just for an idea of where I think it'll go in the long term. But yeah, I'm cash. I mean, I can buy puts if the market just starts crashing one day. I'll just buy puts. They'll be expensive, but I'll buy them anyway. And then because I'm cash, I can just buy the bottom. So you don't have to like spend all your time concerned on if the market is going to crash or not. It becomes a lot more concerning when you're over leveraged and short it, and theta's burning up your position. Thank you so much, man, by the way. Win sell GME Man, I'm looking for an opportunity and I'm just not getting one where I'm confident selling them. Remember, I want to sell my covered calls on a run. I want the market maker hedge in my favor when I sell the covered calls. I don't want to get assigned. It's not that I care, right? Like I don't care if I get assigned and I have to buy back in, but I do care about the tax benefit that I have on most of my shares at this point. Like I don't want to lose that long-term holding because my cost basis is still really low, so I'm holding a lot of profit in GME, right? And if I lose that long-term holding, that's gonna really suck. So ideally, and I have to sell big blocks of covered calls for it to be worthwhile. And so yeah, I'm really particular about the timing of it. I'll sell some I'll sell some like 50 calls like out of the money every week or something like that for like play money. But I'm not selling anything, relevant or profitable. Did I miss a response? No, I covered your Upstart question. Upstart looks really good to me still. I mean, it's still failing enough to stay on reg show, right? Consistently. I mean, it was on reg show as of market close on Friday. That's all we want to see. We just want to see it stay on reg show. That is ideal. Because we will approach a period where they're going to have to clear out the obligations created to continue short selling it naked, right? Shouldn't the stream be like 100% likes? Whatever. Assuming October no packs, what price action for GME can you see playing out? I can see it start to go back up to the low 30s on a market reversal into November OPEX. Well, don't forget we have, ETF FTDs once again in early November. So that's very possible. Especially if the market's rising. Yeah, I mean GME is kind of the spring is compressed, right? If we do get enough pressure to the upside, it will pop. Generally speaking, that pressure doesn't occur in large enough amounts until an OPEX period. But yeah, I would say actually if we don't see an October OPEX, we're likely to see more shorting. I mean, don't forget ETF FTD period's over now, and the ETF should be more liquid. So, we should see more short liquidity available for GME, but we should also see more usage now into this part of the period, like cycle of GME lending pool liquidity. And so we should see the borrow rate start to inch up. And obviously those gains in the borrow rate are exponential, so it can increase very, very rapidly. What is this little icon of you giving the bird doing next to my name? Oh, that's like the 12-month icon, I think. I know you don't like hot beverages. Bet that cough needs some tea or better, warm milk and honey. Get well. Yeah, I got a little sick into the end of last week, but I'm feeling better now. It was weird. It was like very brief. Thoughts on rental properties versus shoving funds into the stock market? I mean, rental properties aren't bad, but rent prices are going to come down eventually too. I don't know. A lot of maintenance. Yield is okay. I guess the underlying's an appreciating asset after the housing market finds a bottom, but I mean, bonds are probably better than either one, frankly. But everyone hates bonds. I work for a REIT and travel to a lot of data conferences for real estate. I think the data really shows mid 23 into 24 will be a pricing bottom. Prices will remain deflated through 27, likely. Yeah, I could see that. I could see them continuing to be deflated for a very long time. I was so struggling to trade SPY and SPX last month and already lost money. If you have like 50K cash on hand, I want to be safe about it. Would you enter any put position preventing a crash or just do some day trade and wait for directional positions? I mean, I've really been levered. Well, so I've been adding to my like long SPX position, but remember when I say long, it's not really that long, right? I have calls at like 3650, 3700 and 3800, right? So I'm not super bullish, right? It's not like I'm targeting like 4000 or like 4100. But yeah, I've been leveraging a lot of my profits from overnight straddles into, slightly longer dated but fairly close to the money calls. Um, I don't know if I'd be opposed to having some long-term protection, but maybe wait for VIX to stabilize. You know, VIX is very cheap protection. That's one of the advantages of it. Is if VIX is declining, it's very cheap to get market crash protection from the VIX. A lot cheaper than it is to try to get it from like SPX, right? But yeah, mostly just enjoying the volatility of day trading it right now. Oh, back to what you were saying, Gilgamesh, about prices remaining deflated through 27. Yeah, I think that's perfectly reasonable to see the bottom continue to drag, right? I mean, pricing after the bottom in the US market in 2012, really kind of stayed fairly flat until 2014, 2015, until it really started to surge back up again. So yeah, it's reasonable. Although I do think a lot of millennials are very eager to buy the bottom. You mentioned doing a possible leap covered call deep in the money in AMD. Just curious what kind of strategy that is. Well, I want to continue to own my AMD. A lot of it also long-term holding. Not a lot of it anymore, but a third of my position roughly is long-term holding. Um, I don't want to take any gains on it this year because my cost basis is still like 45. Because I averaged up. And yeah, I would have to pay taxes on it if I just sold it off this year. So what I'm gonna do is I'm gonna just sell uh deep in the money covered calls, which basically gives me an interest-free loan against the underlying for a portion, obviously not all, but a portion of my ownership, right? So we're at 57 right now. If I sell them at like 35, I'll capture all the delta to the upside. And then, if AMD does fall over the next like year and a half, below 35, I can close those, right? And then I'll have just made a profit. But in the meantime, I can take that capital that I get and leverage it elsewhere in something that's going to perform better. If GME was priced higher, I would probably do something similar with it, but it's not. It's not worth it. I still don't quite get why and what catalyst Upstart would actually run hard. Okay, so here's the deal. The short position in Upstart is overcrowded, right? It overcrowded to the point where not only it, but its primary ETF, which is bots, were both put on the threshold list on the same day. Now, bots is cleared off. They got it off, but it's an ETF, right? Upstart remains on threshold. Um, all of the shorts leading into it being threshold, and all of the shorts following the beginning of the thresholding period are synthetic, right? So in order to keep the price low and keep their short positions from blowing up, they have to short it every day, right? They have to use liquidity not only to hedge the options chain, but they also need liquidity to continue shorting the stock and prevent the price from going up, which you've seen them work, especially last week, very actively at doing. All of that liquidity, if it is not raising the borrow rate, is synthetic, right? And remember, at this point in time, in order to short Upstart at all, you need a significant you need a significant amount of time to get a real short position to use like the SEC lending pool. That's not something they can do in like uh Well, they can do it intraday, but it's not quick, right? Like they can't do it in response to it, breaking through its like positive hedge level at like 25, right? Because they have to get that pre-bar agreement. So that means they have to contact a lender. That lender has to then pre-locate all the shares that they're going to borrow, which they shouldn't be able to do. And then they can sign the pre-bar agreement and then go ahead and short the stock, right? Um, so instead, they're going to use ETF liquidity and they're going to use puts to continue to suppress the price. That way, they get the market maker to use their liquidity provisions to short on their behalf, and they get the AP, or they are the AP, and they're using those liquidity provisions to short. Whenever they do that, they create large amounts of obligations, either in the ETF or in the underlying stock directly. Those obligations have to be cleared. It's literally what drives the OPEC cycle. The difference is that when you're on threshold, it's even more rampant, right? So the everything creates an obligation because you can no longer use primary or prime liquidity to short. So all of your shorting has to be done synthetically. And they're just racking up those obligations. When they'll cover them, that's a good question, but there's only so much time. Updated PT for cat. I've had a few stops that triggered around the 175 level. I'm wondering if I should tighten up stops for my remaining position. I mean, I don't even have stops on my like December and January positioning on Caterpillar. I did have stops on my some of my November position, but I'm still in a lot of my like 165s, my 170s. I'm in pretty much all of my like 180s. Well, some of my November like 180s and 185s I sold off, but my January and December positioning I'm still very much in. And those are, further out, 190, 200. Thoughts on JPM content calls for gloomy near-term forecast? Are they hinting at possible QE coming to first to second quarter? As it seems like Baby wants its bottle back. Baby's got plenty of liquidity already. All right, Baby needs to shit the diaper. All those banks are sitting on trillions in cash that they don't want to deploy into the equity markets because they want to get the cheapest possible price. Thoughts on Amazon bottom in the short term? I mean, if if I were at a fund, I would say below like 98 on Amazon is a buy. Um, I might target lower, but you have to wait. You'll have to wait a couple quarters for it to be worthwhile. Or are you just trying to play like a bounce? Oh, short term. Sorry, I didn't read that part. We might find a bottom around 100 again if we haven't already found one. Remember, if Amazon prints good earnings and they have a lot of revenue streams to draw from, it'll bounce again really hard. More cash to the crash. Thanks for the education. You got it, man. What are your thoughts on the near-term price movement for Revlon? I really don't care about it. I do think that there's a possibility that some after-hours buying triggered a market maker hedge the following day, or at least maybe a buy-in from a fund tracking after-hours movement. They generally track volume, but on something as illiquid as Revlon, they could also track price improvement. And what's interesting about that day of the hearing is I think someone bought in, right? Not a lot, maybe like 600,000 shares, 400 to 600,000 shares. And some of this may have been retail. And what happened then is I think that triggered a need for liquidity. Remember, low liquidity equals high volume. And they don't want Revlon to go back on Reg Show. So it's very possible that the rest of the 13 million volume that traded that day, or 14 million volume that traded that day in this range, was in order to offset the liquidity needs for that purchase. The next day, liquidity was more normalized. They were able to bring the price back down. People paper handed, things like that. But when I talk about how sensitive Revlon is to buying, I mean it. I mean, if Wall Street Bets knew about Revlon and started YOLOing into it, it would probably trigger a squeeze. Like, it doesn't take a lot. It's got such a tiny float, and it's so illiquid, and the market maker is super exposed on the upside to those calls. Even if most of them are short, their shorts are exposed to increased volatility very, very rapidly, right? It doesn't take a lot of volume or price movement for Revlon's IV to double or triple. And if that happens, people who've been selling 35Cs are going to have their positions blown up very, very quickly. And they'll start closing them, and that's a very dangerous position to be in, short vol on something that can pick up volatility so quickly. So I still love Rev. I'm still in it. I'm fully aware that I may lose all the money I have in it. I'm okay with that because I might not. I think if we have a NOPEX in October, right? If we don't have sufficient obligations for GME in October, we're gonna probably see a November OPEX and maybe a big one. Like they're definitely building up some obligations, right? We're still very illiquid. Sorry, I'm trying to make sure I'm not missing anybody's questions. You said you looked at a nat gas plays and found problems. Problems with AR, not like a lot of European exposure, right? For Antero. I don't dislike Antero, but I'm not super concerned. Like I know natural gas prices in general are going to go up, and that's going to benefit the whole sector. But I want more exposure to someone who's going to profit off of the situation in Europe, and that's a little harder to determine. Like who's positioned best, right? At what point does a contract run out of time favorably? Did you cap 30 days from expiry? It's time to take profits and leave. Yeah, probably, depending on how deep you are in the money. Remember, the more in the money you are, the less theta decay there is. If you're $40 in the money, you can hold that contract all the way into expiration, right? Yeah, I think we could see some T+2, T+3 effect. Technically there shouldn't be any ETFs for Revlon, but we may still see something. Any chance that Rev will see any OPEX action? Possible. Yeah. No, Mold's not back. How's the outlook on SPY this upcoming week, Greg? I kind of answered that already. We're still very much in the pimento. It's ending. We're getting out of the pimento, but we're in it. I'm still targeting buys in that range sub 3620. Obviously, if it slips the downside again, I'll consider closing long positions or flipping short. I'm continuing to straddle it every night. I think with the second bounce that we may have, kind of found a floor. Here, let me switch to a standard candle here so we have a little better idea of the price action. I think if we see a turnaround on Monday, it looks really good for another move to the upside. So, especially with all the puts closing Friday, I'm feeling pretty confident tomorrow. I know there's a lot of bad news over the weekend, but we'll see how futures react tonight. Obviously, not open yet. I'll have more updates on that and like Pickles picks tonight on what I'm expecting. But I think this chop can continue out through the 21st, especially with SLD this week. And this week's mostly housing data, so there's a little bit better chance at bullishness, but I still think we want to see those puts on the 21st that are in the money close out or cash settle before we can really see any good upside. Like, I don't think we're going to see 3,800 until those close out. It seems unlikely. Bearish on semiconductors. I mean, not necessarily bearish on Taiwanese semiconductors, but maybe bearish on Chinese semiconductors. You can short them. I really don't know what companies they are. But there's a few of them. I'm sure you could just look it up. There might be an ETF that tracks Chinese semiconductors. Thanks to the pick spreads the last couple weeks, Sava was nice. May have gotten a bit greedy not closing out the short puts on JPM Friday though. Oh, okay. Yeah, sometimes it's good to take, if you get a big swing on an iron condor like that or a iron butterfly, sometimes it's good to take the profitable spread off the table and leave the other spread. Like you can then hedge the other spread. Um, Although I think JPM is gonna probably be fine. Did they move a lot in after hours? I didn't even look. 1 hour extended. Yeah, I mean JPM it fell to 110. Maybe I'd be afraid of like a little bounce here, but I don't know. I think it could continue to slip. The earnings were okay. Remember, your position also benefits from theta, like the decline in theta, and your position benefits from the drop in implied volatility. So when you sold it, Ivy was very high. I doubt it will remain very high. Like it's probably going to fall back into that like 20-30% IV range that it's historically at. Hey Girk, I joined Dillionaires last Friday and tried to hit you up after stream to get into that Sacred Country Club. Direct message on Discord, right? Yeah, did I not respond? If you want, there's a thread. I might have missed the DM. I think there's a thread in general chat. So if you go to general chat and click on threads, there's a how do I link my accounts to get into the country club. And in there is all the instructions that you need. European housing market's probably going to drop really hard. I'd imagine damage to plumbing is going to be a big deal this winter, especially on properties that aren't occupied. You know, they're not going to be able to heat them, right? It's a big deal, but could be some amazing opportunities for European real estate over the next like 3 to 5 years. And I hate real estate, but I'd even consider that. Yeah, still bullish on Rev and Upstart. Are there any emerging market or foreign stocks that you have an eye on? Not really. Obviously, with all the risk, I've like pulled back any research that I've been doing into emerging market stock or foreign markets. I'm pretty. I guess my only foreign exposure is like my yen Nikkei position. I think continuing to short the Nikkei is going to be very profitable over like the next year or so. We did get some good news from the Fed this weekend, right? One of them came out and said that Dixie should be cooling a bit now that the rate increase has been in place for a while. What are alternative ETFs? I would just get VIX exposure directly, probably. It's probably the best way to handle it. All the VIX ETFs are kind of fucked up. There's a bunch of other ones, but VXX and UVXY are currently no good. And then, as probably on the next market rally, we'll see insane short positions pile into other ones, and those could get burned too. So, risky trying to use the ETFs right now. I'm playing SQQQ, TQQQ. Should I focus my TA on QQQ because of the decay that happens at the 3x ETFs? No, you should focus your TA on the thing you're trading. I'm serious. Don't use like QQQ or SPY to trade like TQQQ or SPXX or any of those. Don't forget they have a depreciation, so their support and resistance levels are different. They're also used to hedge those larger ETFs, and so the positioning on them isn't necessarily the same as the underlying thing that they track. Interest rates, if Jay Payne Powell keeps hiking up, bonds will continue to fall. If said falling bonds are propping up bullshits as collateral, will be big. F is facing marge calls a la UK pensions. Yeah, that's possible. I mean, I think a lot of that is putting pressure on their same as cash. Their same as cash positions is gonna ruin their ability to leverage their margin, right? And force them to use up their actual cash liquidity. So, pressure on bonds may even force large institutions to buy more. Or we'll see capitulation, but I get what you mean, Jedward. I think. What are you worried about? Be worried about being assigned with such deep in the money covered calls? Not really. No. I mean, I'm gonna sell them for like 2024 or 2025. So yeah, I wouldn't say I'm very concerned at all. Also, if it falls to 35, I'm gonna buy a lot more AMD, right? AMD is still, year over year outperforming the NASDAQ 100 significantly. And even though they revised their expected growth, their actual growth was still up 29% over the previous year. So they're still growing and they're still taking significant amount of market share on the enterprise side. And also, with XLNX, and, allowing them the technology to release chips that are updatable instead of them having to be replaced, they're going to become even more attractive for large enterprises, and slowly just squeezing out the market share that Intel still currently commands. But I don't trust anyone more in the world to handle it better than Lisa Su. So as long as she stays at the helm, I'm pretty confident in AMD long term. What short positions would you build for a market crash? SPX puts? Yeah, I mean, out of the money SPX puts are probably the best way to play a market crash. They're expensive, but if they hit, you'll make a shitload of money. Especially if VIX spikes, right? Because those puts are going to ramp up massively in value. Is there any way to go long volume? Not really. You could go short volatility. That would be the way to go, like long volume. What are we rolling jet Rev 35Cs? Oh, there's still more than 90 DTE, right? Probably, I mean, at their current price, probably not for a while. Late November before they hit that last end of the curve. Thoughts on Fubo's options chain going into November for earnings? Also, on Friday, they announced stock inducement grant. Is this good or bad? I mean, Fubo has a shelf offer on the table to pick up capital, which they're going to need to continue to grow. I'm not super worried about a share offer. If it does have if it tanks the price at all, I'll just buy more, right? Like I'll just add to my position. As far as going into earnings, we'll probably see a spike in implied volatility. Could be a good time to sell covered calls. Could be risky. I mean, that's just how all earnings are, right? How do you know if a stock is liquid or not? That's a good question. Liquid stocks are not volatile, not very volatile, right? Liquidity and volatility are intrinsically tied to one another. So the more illiquid a stock is, the more volatility it generates. Which, if you're a volatility short seller, means that less liquid stocks are more attractive. There's ways to determine the liquidity of an underlying stock, but they're fairly advanced. If you have a shitload of money, you can perform liquidity tests on them. Watch it on the big screen this morning. Girlfriend finally gets to see a snippet of what takes up most of my time. What's up, plumber poopy hands girlfriend? I saw this post about 50% of options trading is zero DTEs in the past 3 months, compared to 10% in 2019. Thoughts? I mean, institutions are buying a lot more zero DTEs than they ever have. And that part of that is, they don't want the risk, and they also want to hedge into options expirations when volatility is a big risk for them. So yeah, I mean, a more volatile market will see more shorter and shorter time frame options being utilized. Were you a fan of my long crab concept? Oh, I don't know. I don't think they're gonna pull back the whole season. I think it'll blow over. It seems like, yeah. It just seems like one of those things that like hits the news and it's like, oh my god, we're not gonna have crab all year, and then they just like allow farming anyway, or maybe they'll keep inspectors on the boats. Who the fuck knows? I mean, most of those guys are bribed anyway. How do I short Nikkei? I'm a buy yen. Yeah, you can just buy yen. There's short Nikkei ETFs. You can short futures on Nikkei. Um, Nikkei has e-minis, I believe, so you can go that route. Long yen has ETFs. I wasn't in the right ones, but it does have them. What would you consider long-term spy puts? 30 to 300 in March? Uh, yeah, I could see that. I could target that range into March or June. I'm not sure which one I want to target more. March cuts it close a little bit. With a lot of those really big earnings coming in the like beginning, well, early to middle part of March. So I'd almost prefer like April or June. In June, maybe because of the leap contracts. Or ask a mod. We don't bite hard. Yeah, if you guys are having problems hooking up your account, you could always ask a moderator too. But usually I respond to anyone who DMs me. Sorry for this question, but where can we find the Upstart DD and all DD really? Discord, Reddit, generally Discord. I mean, I write my GME DD on Reddit, but I don't write my DD for anything else on there really. Very, very rarely. I think I wrote DD for BBBY on Reddit once, and that was about it. Selling weeklies, $5 out of the money each week. Yeah, you could do that. I mean, obviously, if you're just trying to get your cost basis down, if we're not near an OPEX or ETF FTD period, the chances of the stock going up are almost non-existent statistically. If you had a decent position of UVXY and VIXY shares that were up 40 to 50% overall without long-term gains, would you hold on for more potential ups or dump due to shenanigans or sell covered calls? I mean, you could sell PMCCs on C-SPAN, right? That's what I do on my in the money VIX positions on my hedge is I'll sell PMCCs against them. So if I think near term market volatility is going to die down, or I think near term market volatility is going to uh stagnate, then I'll sell PMCCs against the position to offset any theta decay. But generally when they're like 50-60% up, I'm looking to like take profits and roll. Obviously I'd want to confirm a bear rally before I take profits out of my hedge, right? I don't care if I maximize profits on my hedge, which is something you should also be considering. SPXS calls would be better than SPXL puts, I think. Like, they would overperform a little bit. I'm just getting my first options contract this week. I want a couple Rev Gen 35s and an Upstart contract or two. Should I aim for Delta or IV price improvement? I'm thinking IV so I get more leverage. Well, on Revlon, IV is ideal. On Upstart, you probably want fairly decent delta. Revlon, Upstart's historic implied volatility doesn't spike that hard. It does have a lot of ETF liquidity. So yeah, I'd be wary of playing too much volatility on Upstart. You can play some, but make sure your Vega values are decent, like 0.1 or better. I wouldn't go, Upstart's chain goes way the fuck out of the money. I wouldn't really be interested in playing like January 500s or anything like that. Do you think Upstart could potentially go to 100? I mean, I think when it rips, it'll rip super fucking hard. I don't know how high it'll go. Gamma Max is in like the 80s, I think. I could actually tell you what it was for Friday. I don't know if we had. Did we check it on Friday? I think we did, but I'll double check. Gamma Max on Upstart's very compelling. Yeah, so Gamma Max came down a little bit with Friday's expiration, but still 65. So down a little with weeklies closing out, but still very high, right? And if we hold it to the same standard that we hold GME to, right, then uh you know that would mean that a run potentially could move, up to like 70 or $75. Although, if it runs from 20 to 75, I'm sure Gamma Max would increase exponentially as well. What's the plan for Monday? Put safe Monday? I mean, I already have a straddle for Monday, so my plan for Monday is kind of already set in stone, right? If the market goes up or down, I'll make money. We'll see what happens with futures tonight. I mean, I'll update everyone later when I do pickles picks. Some of the smaller ports, does it make sense to sell strangles on SQQQ than with SPX? Covered strangles, I assume? Can someone take larger risk with delta neutral position versus a directional one? I mean, you can take more risk with something delta neutral. Selling strangles is nice just because IV on SQQQ is really high right now. But the initial capital outlay is very high, and the returns are good, but the outlay is very high. I've been doing it because I just don't mind owning SQQQ right now, as long as I'm getting assigned in a range I'm comfortable buying it at. Do Forex ETFs depreciate over time if they're leveraged? Thank you so much for gifting one membership to Extra Pickles by Polar Bear. I appreciate it. Welcome to Cornichon Extra Pickles. If Upstart hits $80, would you finally stand up and show some quads and kneecaps? I don't know about that. What tomfoolery has begotten the YCL December options chain? Let me take a look. Remember, yen is massively short, right? I really don't see any open interest on it. I don't really see any interest at all on it. Generally, these more illiquid ETFs, you don't see a lot of options interests on. For SLD, I understand the drop due to sell-off for SLD. Is there a reason for the upside chop? October 21 put OI still has a lot. I'm aware. Could only see down days into OPEX. That's possible. Yeah. I'm not saying that's off the table. Historically, we generally rise a little bit into SLD, mostly due to the previous week's sell-off of puts. Right, October 14th didn't have a small number of puts selling off. It was pretty crowded. So these sold off. That can lead to an uptick in price pressure over T+2, right? And then that just sets you up for a rally into SLD, which sets you up for a drop into OPEX, right? And then OPEX T+2, because all the options are expiring here, sets you up for another rally on T+2, right? And that put OI at 3,300 is not going in the money right now, not unless there's a major catalyst. A lot of that's sold too. And, don't forget that when you're looking at put OI, it's not all bought to open. So 33 and 3,400, I think, are very oversold right now as far as puts go. 3,500 are a lot of bought to open, but even the 3,500 level mostly sold off on Thursday. 3,550, 3,600, those are a little stronger bought to open. Rowing machine collecting dust? No, used it yesterday. SPXS calls and XPXL puts, sort of same like SPX puts. Not at all. No, they're not the same. If you're looking at SPX puts that are right now, we're trading at 35.83, so they're a bit pricier. But if we do rally, right, and you're buying SPX puts for June 16th of next year, right, you're looking at the 2,900 range. They're probably about 10,000 a contract or 3,000 range are probably like 10,900 a contract. They're not cheap, but they could print super super fucking hard. The thing is if we rally, they'll drop in price. Like March 31st would be another one I might consider. Yeah, like 3,200s are like 11,000 each there. 3,000s are 7,900 each. Isn't bad. Remember that those contracts in the money are worth, almost double. And with the possibility of a crash, right? You're talking about a massive bump in IV. For possible October OPEX, usual plan, 0.2, 0.3 Delta calls bought Wednesday, Friday this week. 0.3 through 0.1, but yeah. I feel like my gift was not appreciated. Okay. It was. I appreciate. I mean, I'm sure extra pickles is fucking lit up right now. Did you use the rowing machine yesterday just to remove the dust? No, I've been using it like twice, 3 times a week this whole time. I still exercise. I just don't like going to my gym. And the other gym that I could go to that's kind of near my house is gross. Smart to buy the farther. Yeah, you want to be able to manage the position for a long period of time. For like yen and Nikkei, you want a really long period of time to manage it. So yeah, the farthest out is best. Remember, like the ultra short and ultra bear ETFs aren't great for options. They're better with just shares. I don't know if it's the one Kevin Spacey used, but I have a concept too. Yeah, it's a good workout. Do you think realistically that the Fed will stop hikes? Yeah, next year. No, I don't think they give a shit. I think I mean, the pressure they're creating in the market is what they want. This is good for them. I think anybody calling for QE right now is out of their minds, including the UN. How much would you trust stock recommendations from employees at airport bars? Eh, I mean, weigh it. Employees usually don't know anything about their company's value, unfortunately. Wonder if there's a play with the China chip thing and BMW signing a contract with Chinese AI chip company. Could be, yeah. You could maybe short BMW. If all goes according to plan, how much do you expect to make off the Rev play? Well, I would like to. Ideally, my target initially, at least, was to hit another 3 or 4x move on the Rev 35s, and sell off my shares above cost basis, which is now at like mid $6 range. So if I get that, I'll have made I don't know, like 200 grand off Revlon total. It's not a lot, but I didn't put a lot into it. November rate hike might be the last. I don't think so. I understand people are calling for that, but I don't think the Fed at any point has even hinted at the idea of backing down. If anything, what we may see is lower rate increases. So instead of, 0.75, maybe you get a 0.5, which would be very bullish for the market, obviously. But I think they're still targeting that aggressive rate regardless. And don't forget, futures have already priced in like 4.5, and the current Fed rate's at like 3.08. So they got a ways to go. SPY 520 end of year. So you bought puts again, Bipolar Bear. What's the difference between TQQQ put and SQQQ long? They're different funds. I mean, theoretically, there should be no difference, but there are. There's slippage. When QQQ is rising, TQQ is going to be more liquid and have tighter spreads. SQQQ is going to be less liquid and have looser spreads. And then the inverse of that is also true. Remember that the market is inefficient. It's not, there is no efficiency in the capital markets. Everything is designed to try to make it more efficient. That doesn't mean it works. What's your time frame for Upstart again? Jan 2023. Yeah, I mean, I have a lot of Jan calls. But I have calls across the entire range. So November, December, January. Are you a Rev bag holder now? Well, I haven't put any money in Revlon that I didn't make off Revlon. So, I mean, my Revlon position is holding its own bags. I don't really have to worry about it. Are American LTL companies like Old Dominion and FedEx ready to take a dump? Yeah, as demand decreases, they're definitely going to take a hit. What do you expect U.S. pension funds to do in this environment? Bonds, heavy into bonds, probably. Yellen is talking about a treasury form of QE. Yeah, I read about it. I mean, that's obviously separate from the Fed, right? Market has a way of disappointing retail. Now that the retail is betting for the market to go down, I think the market will reverse. Well, retail is very easily psychologically influenced, right? As a whole, I'm not saying that we aren't more informed here than like investors in general. But yeah, if you look at retail sentiment outside of our bubble, there many are betting that the market crashes and dives down to the 3,200 range, 3,300 range. um I don't necessarily agree with that, at least not in the short term. In the long term, sure. So it's VW that have a $2.4 billion deal with China AI, so maybe no play. I mean, you could go short. You could go short VW. But it's Europe, right? So I don't think like US tariffs are going to affect that side. It's going to be, it could. I mean, it's going to impede production. So yeah, I mean, there might be a play there. I'm not sure if there's one I'd be interested in playing, but you prefer bonds directly or bond ETFs? I'd probably just do bonds directly. I mean, I can manage them, right, without paying someone else to do it. It's easier to just do ETFs, but I don't love ETFs. If you do notice one thing from a lot of my positioning, you'll notice that I'm not really in any ETFs at all. I own very few ETF shares, if any, at this point. I don't like ETFs. I think they're a contagion. They're a huge risk in the market, so I try to avoid them. I hate and love to ask it. ask, but on the SPX 30 minutes starting at RBB, I'm just curious for an example. Um, I guess one could argue that it'd be the very early stages of one, so not quite yet. Sentiment does matter, except none of those people are in charge for the most part. Like American retail investors aren't in charge of their own capital, so regardless of what they think, it doesn't matter. You know, all their capital is mostly managed, like 401ks and pension funds and stuff like that. So the vast majority of retail's capital influence in the market is just increasing. Like they're just bullish every week, right? Every time they pump more money into their 401k, they're just buying more shit, lightening the bags, if you will. Anything you would like us to know for what's happening in markets the next few weeks, months? This week's not super interesting outside of SLD. I mean, we have some housing data coming out. You definitely just want to take it 1 week at a time. I've gone over my like longer term analysis of economic predictions. I have the video up here on the channel, but if you want to know kind of where my head's at long term, um, yeah, nothing super exciting this week. Some Fed speeches, you know, for them to come out and say hawkish shit. Housing starts and building permits is kind of important. I guess we have New York State manufacturing, which is expected to improve. Industrial production is forecasted to drop a bit. I don't think that'll have a big effect though. Yeah, not much this week. Kind of a boring week. You peek at Dow. Yeah. Chemical manufacturers are still reeling a bit, just so you know, from the supply shock. Very good price on it right now, though. I don't hate the current levels. I would probably target the lower range. I've looked at Dow quite a bit over the last like month or so, and it continues to drop. I'd initially was gonna actually buy some here up in like the $50 range. Then I thought I missed my opportunity, and it's been just coming down with the market since. I think it'll continue to come down with the market. I think a lot of these manufacturing and industrials will really see improvement next year, but not yet. So I think there's plenty of time to average into a position here. Good yield on Dow, by the way, 6%, something like that. Is it here? 6.21, 6.21%. What do you make of the fact that there's a global dollar shortage? I don't think there is a shortage of the dollar. I mean, like physical dollars? I mean, they'll have to get dollars from. I'm not sure if he's talking about like dollar reserves or like physical currency. Who the fuck uses paper money? That's a good question. I don't know about full porting into gold, but no, fuck gold. if you want gold exposure, I mean, I guess GLD. I really hate it. COMEX is so fucking corrupt, and like gold is massively over short. It would take an obscene amount of buy pressure on gold to break it. Long story short, I know someone developing a large chunk of land into 400K houses. Hasn't broken ground yet. Condemned buildings need to be removed. Has he missed the boat? Yeah. I mean, he just needs to wait, right, until, cost to build drops in line with housing prices. I meant dollar liquidity shortage outside of America. I don't know where you're getting this from. Like there's a liquidity crisis in the dollar, but it's more that like it's more due to the rising strength of the dollar, right? It's not because real rates are rising, right? But the Federal Reserve, I guess, could step in to provide liquidity. It's unlikely. At least this year, maybe next year. There's plenty of liquidity in on RRP every night. The banks are more than able to provide the liquidity. The Fed already has, right? Just because it's all locked up and people are trying to make money off of it doesn't mean that the liquidity is not there. It's just not tapped. But if that starts to generate risk for them, they'll release their own liquidity. You think the dollar is going to squeeze? I just don't see it happening. It seems really far fetched. Yeah, I know, I know what you mean, but I mean that liquidity can be brought in from elsewhere, right? They can do currency swaps. They'll just have to lose on the exchange, right? Which is good for us. That doesn't mean we need to create liquidity, though. I don't think it means that we're gonna get QE sooner. Any thoughts on gold miners? No, I don't like mineral speculation. Too much. It's just gambling. There's too much shit that can go wrong. And it's not like active gold mines are going to need to ramp up production. There's plenty of gold already. I told him he can't wait as he's placed material orders and paid asbestos specialists for removal. Fuck. That's rough, man. Yeah, it's a shitty position to be in. He may be stuck with a big fat bag for quite a while. The question we all want to know is when Jimmy will start hitting $60, $70 on OPEX runs. Maybe next year. 60 or 70 is kind of way out of the question right now. If we had an OPEX right now, I wouldn't target much higher than like 40 or 45. Thanks, Lawrence. Why did Netflix run the last couple of days if earnings is this week? Um, they released a new subscriber tier that's ad supported and cheaper. They've already discussed their intention repeatedly to cut off family sharing. So, they're doing things investors like. Also, there's a pretty good argument that, Netflix could get more in line with the rest of the FANG stocks in terms of its valuation. It lost a lot, right, this year. No, because they're raising the cost of labor. That's how they boost unemployment. But it has nothing to do with layoffs in exchange for tax benefits. The next bankrupt target. When do we get the scoop? Still looking at it. There may not be a boat to miss, though. Do you think the Fed pulls back that inflation will rise strongly not long after again, like it historically did in inflationary periods? Oh, yeah, that's very possible. But I think they know that, right? Like that's why they're targeting such an aggressive rate. And if when they go to pull back, it's going to be slow. Like they're not going to pull back rate increases all at once. Like I would expect us to move back into the neutral rate in mid 2024. But yeah, inflation's very frothy, right? It's hard to it's hard to tamp it down effectively, especially with monetary policy. It's not the best approach. Like governments should have been taking steps to avoid this well in advance of it happening, before it got placed onto the shoulders of all the central banks. But you can't fix what's already happened. But that's also another reason that I think we're not going to see market bottoms till like mid next year. And we could stay at those bottoms for quite some time. Like it may not be, our happy like crash bounce that we've had so often. It may be a much slower rate, right? Like and that could be like, 24, 25. Tesla earnings this week as well. We'll finally see if their PE comes down in line with other tech stocks since November. Yeah, we'll see. They've had some really bad news this quarter and some fairly good news. So I know their Chinese production was up, but with the semiconductor production in China going down, I don't know how that's going to affect them. I imagine it can't be good. We're not getting 13% Fed rates without blowing up the whole thing. Who said 13% Fed rates? I don't think we're getting 13%. I think we're going to hit the aggressive rate like 4.2, 4.5, 4.25 to 4.5. I don't think we're hitting 13% rates. That's not going to happen. Yeah, after real crashes in the past, it's sometimes taken a very long time. But remember, speed of information is everything, right? Um, over time, as markets become more efficient, crashes and recessions will last less and less time, not more and more. Also, with all the banks sitting on liquidity, I don't imagine that our bottoms would last for very long. At least not at the lows. I think an initial bounce up from the lows would be pretty quick, provided we get a crash. What if the ghost of Paul Volcker visits JPOW this Christmas, causing a change in his plan with rates? I don't think the Fed's changing their plan anytime soon. They seem very committed to it, as they should be. I mean, they should use the stability of the markets to continue to aggressively pursue rate increases. I talked about this all through, March and the early parts of summer, that, if they can, they needed to really ramp up their rate increases in order to have an effect on real inflation with monetary policy. Otherwise, they'd miss their window, and they didn't. Right, like September came along, and you know nothing but aggressive plans and hawkish outlooks. Right, that's not gonna. They're not gonna back off on that. I think over leveraged households across America are going to get hit really, really hard. Consumer debt is sky high. I mean, my assessment, I think, this year of the Fed's moves has been fucking spot on. So, um, at least a lot more accurate than any of the other analysts that I've followed. Um, not to toot my own horn, but I've been pretty accurate. Remember all the people calling for a crash when oil was spiking and when nickel squeezed and when the pound tanked and the dollar runs. We're still here. We still haven't crashed. What's up, Ben? Or should I just start calling you Market Watch News Alert, Unusual Activity Alert? All right, guys. I think that about sums it up for today. I'll have Pickles Picks out tonight. Gonna be focusing again a little bit more on some long-term buy and holds. I think there's a few things that have hit PEs that I really like. So there'll be a bit more of those, a bit more spreads as we try to remain a little more risk averse with all this market volatility and economic projections for the coming week. You think governments will pull back on their idiotic green energy politics when they see energy situations getting worse? I mean, I'm long coal, and I have been since Feb of this year. So, not that they're going to pull back on their idiotic policies. I don't think they will. And I don't think green energy policies are idiotic. I think they're just slow to implement and they're not going to be realized in the near term. But I do think by like 2026 or so, green energy is going to drastically outpace fossil fuels. Thank you guys so much. And I'll see you tomorrow morning. Have a great rest of your weekend. Bye, guys.